Thank you very much. Okay, I will go first today. I have a meeting to go to, and often on a Tuesday, the Amazon man turns up just as I'm in the middle of my little speech and my talk. This week we've arranged it, the Amazon man will not turn up, but about 10 minutes ago, two blokes and a chainsaw turned up looking at the orange tree outside my window from the council. So I may have to stop quickly and then go. If we hear the sound of a chainsaw in the background, it is not me trying to open my wallet. It is me trying to go talk to the gentleman with the chainsaw to possibly go do one of the other trees. Hi, Ishak in Singapore. Okay, on screen I have a slide, and this is from a presentation that Rich Friesen and I did last week, and we will put a replay of this in a blog post tomorrow or Thursday, and it's all about the biggie of psychology. And psychology is the thing that screws all of us. And I believe anybody is capable of trading Forex or trading anything. We can teach you the nuts and bolts, and you move this here, you do that, you look for this, and then away you go. The thing that screws all of us up is the psychology. And whether that be over trading, over leveraging, revenge trading, simply not following rules, it is the big issue, and certainly was my big issue. I had been trading for 2.5 years. I was stopping losing, but I used to go into a meltdown. So let's say I would have a month of really good trades and followed all the rules and did great. And then the following week, I would get overconfident or just go into meltdown, and I would lose half or all of the profit from the previous month. And then the final time, I was on the verge of quitting before I found Rich. And I went 5 months, hit my target, kept a journal, did everything as I was supposed to do. Woohoo, finally I have cracked it after 2.5 years of struggling. And then I lost half of it in an afternoon. So at that point, I took a break. And many of you might be at that stage where you should take a break and walk away and let the dust settle and think through what you are doing. I knew how to do this, as all of you know. But it was my actions and my psychology that were killing me. Literally, as a trader, I would never be successful had I not met Rich. So the point then is, how do we get past this? And we will all have shared this sentiment. There was a famous video on YouTube years ago of a guy going absolute meltdown as he blew up a $25,000 account. I don't know if it's still up there, but it was painful to watch. And he just kept going back to the screen and hoping that things would turn around. And of course, as they say in trading, hope is not a strategy. And it didn't, and he lost a lot, and then threw the computer around the room and smashed the whole flipping lot up. So we've all been there, and we all know how to feel. And then this is a slide that Rich put up. So let's have a bit of interaction today. In the chat box, tell me how many of these apply to you. So, impulse trade, mistrades, overtrading, repeat the same errors, stress, fear of loss, jump from system to system, not disciplined, let big losses run, feel stuck, fear of failure, cut my winners short, lack of confidence, ruled by emotions, afraid to lose money, afraid to pull the trigger, self-sabotage. I think the only thing I was probably never too afraid of was pulling the trigger, although if I went on a meltdown, then I would do. Alon says 80% of them. Yep, John says too many. Everything says Abgar, but less over time. Well, that's the thing I've got to say. I got to the point, I was conquering most of these issues, but it was this thing about going into meltdown, and it was just so depressing. And everybody talks about mental health these days, but it was making me ill. And then you feel so bad that the next day that you go sit in front of the screen, you're just starting from a negative point of view. And a lot of this is to do with internalizing and understanding how you feel. And I'll have to have a word with Rich. I know many of you in here have previously bought his bundle. Alon, if you've not got yours yet, I will be sending yours to you. I've sent you an email today about this. But in the bundle, there is a spreadsheet in there. And basically, if you're not feeling 7 out of 10 on psychological, physical, mental level, and you're too stressed, etc., you should walk away and leave it alone. And whether you then go off and listen to music, practice yoga, or whatever it is that will help you, you need to get your brain sorted out, because I say I can teach anybody, we can all teach anybody how to do this. This is not the issue. This is the issue. There are other parts of this as well about being more applied and having some fire in your belly to get to where you want to be. So the solution, Rich suggests, is that if you can get past this stage, then where have we gone? Well, this is another thing. A lot of people, when they initially come to us, they've learned a different strategy, so it takes them time to get some confidence into ours. And risk management is obviously a big one. Zombie trading is defined by stupidity, which I was famous for. Execution freeze, you're going to do it. I mean, it's not happened lately, but I would often get emails from people, and let's say on the Sunday I'd put out the analysis video and saying I'm going to short the euro and it's 300 pips away. And the reaction on the Sunday from people were, the bloke's mad, it'll never get there. And then I would get emails because it got there on the Wednesday, and people would say, well, it was going that fast. And I just got scared and I didn't push the button, and then it dropped 50 pips like you thought it would. So again, execution freeze, often that's tied to lot sizes. If you're trading, if you're risking too much, then that can cause this issue. Fear of success is a bizarre one, but it is an issue that Rich had with one of his traders. Rich actually went from trading for Merrill Lynch to owning his own trading firm. And he had a guy working for him who only made 150 grand a year. And we're talking in the 80s, so it was a lot of money. And this guy, year one, made 150 grand. Following year, made 150 grand. Anyway, he sent him off to see his sister, who was a hypnotherapist, and to try to find out what was wrong with this guy. And he turned out that he didn't want to disrespect his father. And his father did a manual job, and he felt that his son's job was not a proper job. And we all can get like that. I've had issues in the past. I'm not doing anything that creates anything. I'm just the teaching side of it gives me some satisfaction. But just to take money from the market, you're not actually contributing to society and things. So something I have dealt with at times. So all of those things, and then the state that we all want to get to is, well, you need a paradigm shift, so you need to change the way you're thinking. But then obviously the way that we want to get to is all of this lot. So enjoy the power of discipline. Discipline for me is the big thing. And I'm going to talk about that a little more in a second. Self-mastery, understanding what's going on. Enjoy the challenge. Get up on a morning, enjoy what you're doing. That's the whole point of doing this. Well, the whole point is to make money, but second one is to enjoy what you're doing. Otherwise, go do something else. Cut the losses, let the profits run. Trade with focus and flow, feel joyful, increase size with comfort. What that is referring to is if you're trading on a smaller account and you're starting off with 0.5% risk, then you might consider to go up. I know with a funded account, I've done a few funded challenges of late, and I've started off with 0.5%. And then once I've got to 2%, 2.5% profit, I cranked it up to 0.75. And then when I got up to 5%, I've gone up to 1%. So that's as far as I would go on that one. Obviously, the goal is to be consistently profitable. Again, we talk about becoming professional, writing a business plan out, etc., manage risks successfully. So you can all read and see all of the things that we have on there. So the bottom line is, how are we going to get there? So I'm going to end this now. This is some of the slides from the presentation that Rich did. In here, if you go into the mentor blogs, Rich's has a blog down here. And he's not posted in it much of late because he was busy writing another book. But this is that set scores I was talking about. This is part of the coursework that he does. So have a read of that. And there's plenty of things in here. But Rich has got more experience from a trading psychology point of view, I think, than anybody else on the planet. He started trading for Merrill Lynch in 1983. So that's 50 years ago, doing it on my fingers. He then employed other traders and saw the psychological issues they had. He has a degree in psychology. He has a degree in NLP, which basically means retrain your brain. And those of you who know me know I can't say neurological linguistic programming. Ooh, I might have got it right. So basically change the way you're thinking. And he also, prior to that, had a degree in philosophy, which was a strange one for somebody then to be stood on the trading floor shouting and screaming at people. So there's lots of things in there. And then there's also another section in here. If you go into the education area, there's another section on trading psychology. And I did a little bit of an intro there explaining it. And there's all of this lot. So if you're new, keep focusing on Start Here, the business plan, trading rules, and M2. But if you've been with us for a while and you're still struggling, then have a go through all of this lot. Some of it's a bit woo-woo, particularly if you're English. And he had me doing all sorts of weird and wonderful things when he was teaching me. But once you've gone through all that lot, he has offered to do a series of webinars for us, for Forex Mentor Pro members. So what we would need is specific topics to cover. But I don't want you to just randomly throw them out now. Have a think about it. Have a look through what he's covered already, and then send us, or you can tell us in the next live training session, or send us a help desk ticket saying, I would really like Rich to talk about X, Y, or Z. Okay? So lots of things at your fingertips there. I was talking to somebody about this. Let's come on to this in a little while. Now, other things about psychology is you have to want to be successful. It sounds silly, but you have to be open to bringing success into your life. And it sounds stupid and it sounds woo-woo again, but my daughter is a great believer in what you put out there is what you bring back, and it seems to work for her. And I can't remember the terminology for it now. If anybody can remember the terminology, it's you project to the world a positive mental image and what you want to do, and it then brings it back to you. And I've forgotten the term for it. The other thing is, on a simplistic level, I've shown you this before. This is a free ebook, Manifesting. Yes, Manifestation. Thank you, Zoe and Ishak. So if you want to be rich and you want to make money, then you have to start. Well, they say that you should surround yourself with people who are making money, who are successful. The success is more important than the money, but you want to surround yourself by successful people. Now, in the old days, they used to have, for business people, they used to, in the UK especially, I'm sure that it came from America, they used to have groups once a month where local business people would all meet up together and network. Nowadays, it's easier because you can do it online, but try to surround yourself, read positive books, try to listen to positive webinars, and surround yourself and immerse yourself in groups of people who are going in the same direction as you and trying to improve yourself. I've mentioned this before. We'll put the link in the recording in the post. This is an old book. It was written 100 odd years ago by Napoleon Hill. He interviewed the richest men in America, one of which was Henry Ford, the Ford Motor Company creator. Another was Andrew Carnegie, who owned the steel industry, basically all of it in America. And basically, he went round and he interviewed the richest people in America at that time to try to find what made them tick. And I saw a comment the other day, somebody was talking about Elon Musk and was saying it was the same thing with him. All of these people had a burning desire to succeed. They would be willing to walk through walls to get what they want. And I know in my own life, the times when I have succeeded the most is when I have been in that mental state. And for example, when I was approaching 40 years of age and I was sick of employing people and I was sick of the weather in the UK, I was sick of the politics and all the rest of it, I wanted to go to live in Lanzarote. And it meant selling the house, selling the business, upsetting my kids by dragging them somewhere they didn't want to go initially, and having to create a system of income to be able to, for us to afford to be able to do it. And I went a few times as well to try to buy a property. And basically the thinking as well, we sold the main house. I'd built my own house in the 80s, 90s, early 90s in the UK. If you're in the UK, double check, because you may well find it's still a good tax wheeze. If you have your own house built and then you sell it, later on, you don't pay any tax. You can claim the VAT back on the purchase, which is 22%, isn't it? 23%. And when you sell it, it's tax-free. So that was a very positive step that I had taken there. But the nub of this book is you must have a burning desire to succeed. If you are currently mentally worn out and fed up, then you're not going to get there, in which case focus on your health, focus on your diet, and focus on reading positive books, webinars, podcasts, whatever it is that floats your boat, but do something to be able to set yourself some measurable goals and targets to be able to move forward. And you have to do this, say, with a burning desire. Otherwise, you will be like all those people in the first week of January that joined up to a gym for the year and are already stopping going, or they're now not going every day, they're going 2 days a week. And by Easter, the gym owners know that 90% of them will have quit because it wasn't a burning desire. It was just, well, I really ought to do something better, or they had a burning desire that petered out. So you need to do that. Other things I recommend is you read Rich Dad, Poor Dad. I think Kiyosaki has lost the plot of late. He's been talking about the financial world's going to go in meltdown every month for the last year, although he did predict it at the end of February, so he might have got it right this time. A lot of it's old hat. Raising money is certainly in the UK to buy lots of properties is no longer easy, although again you can find properties in the UK to rent out. You just perhaps can't find them in the area that you want to buy. And for example, my wife and I were looking near Durham in the north of England. Durham is a beautiful city. It's a cathedral city with a university, very vibrant nightlife, lots of young people because of the universities. And you can buy a terrace house on the outskirts of Durham still for less than 100,000 that you can rent out for 6,000 a year net. So you make 6% on an appreciating asset. So there is still opportunities to buy property. But Rich Dad Poor Dad is very good. The concept is that his father was a manual gentleman. He was actually, I think in the end, he was the head of the janitors, either the union or organized them for the council in Hawaii. My father worked in a factory, and just as with Kiyosaki, got no financial education from him because he didn't have any to give, because he didn't know any better either. My father left work at school at 14 and went to work in a steel foundry, and then went to work in a factory printing for years. So, but the concepts in here, the other dad, the second dad he talks about, is the millionaire father of his best friend. And so it's this thing about trying to change your personality, be more positive, and the way that you think about how to use money positively to make more money. And this was this follow-up book that he did. And this nice graphic is very good because it shows you, where do you want to be? Well, do you want to be an employee? So you basically are selling hours for money. You work, you're never going to get rich, but you get a job and you can pay your taxes, and you might be able to buy a new car every few years if you're lucky. Then you can be self-employed. And so employees, most employees I meet, dream of being self-employed. Many self-employed people say you must be mad, because self-employed people tend to work harder. It's more precarious. You never know from one week to the next, unless you're really successful, how much you're going to make. And then the next step is to be a business owner. So I have been a business owner as well. And a business owner is like being self-employed, but now you've got loads of other people's problems. But at least you have people working for you. They're selling hours to you for you to make a profit. So we all want to be on the right-hand side of the quadrant. The best place to be is an investor. And then you don't have the hassle of employing anybody. You don't have the worry of where your next paycheck's coming from in either of these scenarios. So the moral of the story is, get your brain right first before you start trying to do this properly. But if you haven't got any fire up your bum, you won't succeed, is the moral of it. This was an interesting article I was reading yesterday, completely off topic, about why AI won't cause unemployment. And I'll stick the link in for that. It's talking about the Luddites. The Luddites in the 1800s in the UK, when the farming workers went to work in factories, they went around destroying the machines in the factories because they believed it was going to take all their jobs. And this gentleman's saying, just like then, it won't have any effect. So I found that interesting. Now, on the subject of trying to deal with psychology, one of the easiest ways that you can do it is to go onto a funded account. And I have mentioned this on numerous occasions as well. If you go onto a funded account, you have to stick to the rules. If you break the rules, you are out. So for me, in my early days, had I had something like this, then I would not have been able to carry on blowing accounts up, because I would get to 5% and I would be out. And I actually, after I trained with Rich, he recommended me to a fund in America who I worked for remotely. And that was the best thing for me ever as well, because they gave me a rule book, and it was made absolutely clear on day one. If you break these rules and do something stupid, you are out. They cannot afford traders to lose client monies and bring problems on the fund. Now, they obviously had people overlooking what you were doing. There was a floor manager that managed everybody, and they will have had automated systems even in those days, I presume, to stop it if somebody had a fat finger. Just while I grab a cup of tea, anybody know what a fat finger is, Trade? Yeah, well, it's all right saying yes. Tell me what it means, a pair of you, Abgar and John. Julian says, yes, self-employment is great, but it's very precarious. It's not only precarious, I think people realized when COVID came along, I know a lot of self-employed people didn't get anything. And Phil, one of my private guys, he was contracted on a good job, but he was a contractor in technology field, and he got nothing. If you had more than 50 grand's worth of savings, I think in the UK, you got nothing. So the ones who had worked hard and saved up got hammered. Um, yes. So as Abgar said, so a fat finger is you bought 100 lots but wanted to buy 10. So you hit an extra naught. And actually, somebody mentioned this in the forum the other week. They'd done it and then said, "Oh, I stayed up and I got away with it." In that instance, if you do a fat finger, you need to get out. I mean, Murphy's Law is it's the one trade of the week that will lose, and you will lose a significant amount. So whenever you're placing trades, always double check when we're taking them, and double check afterwards that you've put the stop in, etc. And you've got, I did one the other week on the euro. I got the decimal point in the wrong place, and I looked at the screen afterwards and I couldn't find it. The other thing is I have a completely separate laptop. There's a decent make and a high spec, but that one I only do live trades on there. I tell the tale years and years ago. I had my best trade ever in early, probably 2004, 5. I was 8,000 in profit on a trade, and I was finally, I really, really made it this time. And I got to the end of the week and I'd put it on the demo account. That was very painful. Yeah, Indy says accidental trade that causes a spike. Yep, John got it right as well, as did Abgar. Well done. So these make you be disciplined. So I said to you before, I didn't get involved initially because not this particular company. In fact, I think FX2 helped to get rid of the Ponzi aspect of this. But a $10,000 account costs you $80. Your profit target's 8%. And unlike originally when these things came out and you had to do it in a month, you can do it in 6 months, I think it is. Or it may not even be a limit. And you've got 10% drawdown. So it's a healthy drawdown and it's a reasonable target. So get yourself on one. And then you can't kid people anymore because hardly anybody shares the links in the forum. But get on one of these. And then the other one I've noticed is this one. This is on the 5%ers page, but they actually seem to be putting money up now for trading stocks, I believe. So again, this is so much easier than it was 20 years ago that you can take advantage of all of these things. And I am going to have a go at this as well as because for me, I've been trading Forex for 20 odd years. And to be honest, I got bored with it years ago. And then I started to do crypto, and crypto revitalized my interest. And Forex now, I use the same technique for Forex as I used to crypto. I only trade, as you know, from longer time frames now, so that's easy. So I'm not sat there all day. So now I've got the interest back. I'm using the same skill set for stocks. I'm using the same skill teeth in Mark. Using the same skills for gold and for crypto and for. I did have a double at futures. I did this a while ago. I wouldn't recommend this. I did this with this company, and the reason I did it, I have one of my private clients was always fond of futures, and he's quite wealthy, and he went off and he was doing futures, and he was doing well, and then he lost six figures in a week, and I sat with him for a few days, and I just said to him in the end, I think you're gambling, not trading, and this kind of thing is gambling, not trading. So I certainly personally will never do that again. But other things I have tried of late. Oh, if you're in America now, Ashley found out the other week, apparently now if you can get a funded account, even if you're in the USA. So Awanda have started to do prop trading and including for Americans. And the other thing you can see nowadays, you've got so many other things that we can trade. So you've got the Hong Kong stocks, you've got Germany, you've got Japanese, you've got silver, Singapore, Spain, Switzerland, UK 100. So there's lots more things that we can trade as well, which makes it interesting for those who've been doing it for a long time. And at the minute, I am studying options. And I've spent the last few weeks studying options. And I think I've got to the point now where I'm safe to put some real money in an account to do it. But partly this is because if I think the stock market's going to crash, which I do, I want to be able to hedge my positions. But the other thing is what we know is with stocks, with Forex and with stocks, It's the stops that kill us. And therefore, if I can find a way to hedge a long position by using an option, I am sure that A, I can make more money on the option in the first place, and B, give myself a hedge without necessarily using a stop. So that's what I'm thinking at the minute. But the whole reason again about this, I was talking to another trader this morning in a podcast, and he's the same. He's a few years younger than me, but as we get older, you don't want to stagnate. You want to do new things. You want to. I mean, we've got Hilton with us today. I'm not going to tell you how old Hilton is, but Hilton, I had a chat with him the other week. I think he's definitely our oldest member, and he's still as bright as a button. And he said to me, he joined us 15 years ago, but he said to me part of the reason was to mentally keep active. And so, those of us who are getting nearer to retirement, if you're thinking you're just going to sit and play golf all day or whatever and sit drinking, which is what a lot of expats all they do, to me that will lead to an early grave. You need to be mentally challenged, and trading is really useful for that. And so, as you know, I've been a lot more involved in crypto and a lot more involved in stocks the last few years, all of which helps to keep the interest going, and also helps in that if Forex looks dead this week, okay, I'll go off and do something that looks a lot more interesting. Any questions or comments so far? No. Oh, two new messages. Hang on. Zoe said spread betting. I think everybody's thinking about Bitcoin. Yeah, we'll have a look at Bitcoin in a second. Bitcoin's going on the rundown. I do have some orders in to buy some Bitcoin. I never got on with spread betting, Zoe. It always was pitched as being tax advantageous if you were in the UK. You didn't pay any tax on it. But I think you as an Aussie probably would have to pay tax on it. Um, I never got on with spread betting. I can't remember why now. But the other thing is actually we did do stocks with Steve, forget his name now, one of my clients from 2008, a long-term member as well. He was doing stocks through IG, but the margin requirements for IG on a stock on a spread book was horrendous. So if you were taking, if you had a few $1,000s in an account and you were taking a spread bet, I seem to remember that a small trade would take up about $600-700 worth of margin. Ah, it does. Yeah, I'm in Portugal as well. I'm looking at the moment. One is Trady something, Tasty something, but you can do it through IG in the UK. I need to check who I can do it with because I'm the same as you, Des. I'm in Portugal. And for example, some of the Forex brokers are not allowed to sign people who are in Portugal. So unless you've got a company somewhere else, you might not be able to do it with some of the brokers. I want one that where the money's protected is the priority one. So I believe with IG that the insurance aspect, but I need to work out if it works out on, is it Tasty Trade? That's the one. Thanks, Indy. So yeah, I'm not ready to go yet, but I just need a few days, a week to really get my head around it all. I've been learning 2 or 3 different methods. I'm not getting involved in straddles and anything complicated because my brain can't cope with it. I just want to do simple ones. So. Abga says stocks generally as easier, especially small caps. I'm presuming you're talking about spread betting more. Okay. Right. Bitcoin today is dropping. Everything is dropping, as we know, from the other day. Let's have a look at my A portfolio. So I sent a message out to my trading group. In the last 3-4 months, we have repeatedly been bouncing off 92,000. Today, it has broke lower. And this is all as of an effect of what went on last week with stocks, I believe. What I was saying to folks is if I wasn't in already, I would be toying with it. Well, I would be buying a little bit in here now. I personally have an order at 81, 81,076,500, I think it is. On the subject of crypto, on the subject of anything, I am not a financial advisor in any shape or form, and you need to be only use money that you can afford to lose. I never, ever, ever, ever use leverage with this because it will just bite you so hard. But my thinking is that when I did the original webinar in 2020, which you can find inside the website, I think there was 6,000 coins. There are now 36 million coins. And this is the same as the dot-com boom in the 90s when I was trading stocks. in the initial stage of the dot-com boom, it was easy. Everything was going up and it was difficult to lose money. But then everybody and anybody who could put a website up, which in those days was not too many, but suddenly we're putting websites up and people were buying everything. And basically the pool of money was just getting split thinner and thinner. Now, in a downturn and a crash, the first thing to lose value is NFTs and then the crazy stuff. So for me, at this moment in time, I just said to my investing group this morning, if I'm going to buy crypto, if I was new to it, hey, the sales are on. This is great. Bitcoin's 20% cheaper than it was the other week, but it could drop another 20, 30, 40, 50%. I happen to believe that Bitcoin is the best of the bunch, and I believe Bitcoin will go mainstream, but it's taking time because of the Trump scenario where he's given them 6 months for the SEC and the group that he's appointed to look into it, heads of various crypto companies. So it's going to take time this time, but there's lots going on in the background. There's still lots of big companies and trying to form ETFs for Ethereum, etc., etc. So if I was new now, and one of my family members is new now, and she's just put 10,000 into Coinbase account, I said to her, she's not got any exposure to anything. If it was me, I would buy 3 grand's worth of Bitcoin at the minute, $1,000 of Ethereum, $1,000 of Sol, and then 500 of the rest that you see on there. Ignore these at the bottom. These are highly speculative. I spoke about the other week. These are the sort you put $200 in each, and then you leave some cash in case there's a bigger drop down. I thought there was another message there. Okay, so everything is in free fall. This is why you realize why I always tell folks to take this stake money out when you start. So this was the best one of last year. This is Hedera. I'd sent out the telegram when it was at 0.65. It went up 500% in 3 weeks. But on the way up, I was saying to the investing group, when it got to 100, 150%, take the stake out. When it goes up again, take some more out, take some more out. I then bought back some more back in here and took some more profit here. I then bought back in here. Now it's dropped. So, okay, what I've got left is bought and paid for. I still believe that this has got legs. But now, for me to get involved again, I would be a buyer of this again at 12 because I believe it's a solid project. It's well run. It's doing things slightly differently, and it should benefit from Trump. So at the minute, it's coming into a very cheap area. And even if I was to buy some now, you're looking at 128% gain to where it was a month ago. So this is highly risky, highly speculative. I've felt for the last few years that we were going to see a crash in the stock market. It's not happened as yet. But when we look at the FANG stocks the other day, Nvidia's down, everything's down. Meta, Apple, Amazon. I actually do want to own some Amazon. And I do think Amazon, with everything that they're doing for longevity, will continue to be a big, strong company. I like to make at least 25% when buying a stock. So for me, the better area, I would be willing to buy Amazon just above 200. And again, it might go lower, but the long-term view for this, I believe, is okay. Google, I hate Google with a passion, but might be interested to buy a bit. Here's no, too expensive. So the cheaper place for me for Google will be around 165. Microsoft keeps dropping. So Microsoft is definitely within the zone. It shot up the other week because there was talk about some new quantum computer that they come up with, and it was going to be the bee's knees, and then suddenly we're back down here. So Microsoft at the moment is only 13%. So I've got a level down here. Well, I might be willing to break my own rules for one of the FANG stocks. Tesla, I put a stop in on Tesla. I bought this the other week, and I told folks the other day, I'm probably out now. Tesla need to do something. I know Zoe's a big Tesla fan. They're drifting. There is a thought that Elon Musk is too preoccupied with Doge Group, with Trump and the government. Sales of electric cars in the UK and in Europe are down anecdotally and stats-wise. I've seen stats for the fourth quarter last year. There was some Aussies in the room last week were saying that BYD, I think it is also doing extremely well in Australia. And so Tesla car sales slowing down, the tax benefits they've been getting for years may be going. So he needs to get these robot taxis up and running quickly, or the robots themselves. But I believe in Wuhan, China, there's already 400 automated driverless taxis running around. They've also started finding problems in America where idiots are trying to rob people in the driverless taxis because they're going so slow. They're coming up and smashing the cars and all the rest of it. They're kind of a bit like the Terminator, not something the creators would necessarily have thought about. Anyway, so interesting times. Get your head straight before you try to do anything. Get some passion. If you haven't got any passion, go off and do something else. If you're still treating this like a hobby, or you're currently fed up with it and you've lost the momentum, have a break. It's still here when you come back, but you must get your head right. I say I will post the recording of Rich's webinar on probably on Thursday. I'll get Ashley to do it. And I'm going to hand you over to Ashley now because the van has just turned up outside that the aforementioned chainsaw gentleman have turned up in. So I am going to go and leave you now. And I hope you enjoyed today's presentation. As ever, if you have something specific you want us to cover next week, then please submit a ticket via the help desk and we will be happy to try to accommodate you. And Brendan says, fear and greed index is in fear territory. Yeah, there's a lot of nervousness now.